but with Japan, he said, look, let's just make everything 15%. I mean, on the surface, it sounds good. Is it as good as it looks?
It's not as good as it looks. But look, any deal is better than no deal. The way I basically describe it is that we're trading insanity premium. So if insanity doesn't look as insane as it was before, even though there is nothing spectacular agreed, and the deals are basically negative for the global economy, for inflation rate, for efficiency of supply chains, the fact that we've agreed on something and it doesn't look as bad as what people were thinking, our market is cheering on. But you also have to think about it and notice that U.S. interest rates are going up and U.S. dollar is weakening again. So in other words, the question is how much of a risk premium is going to be attached as we go forward to U.S. dollar as well as U.S. Treasuries. But in terms of specifically those deals, I think Vietnam discovered that signing a deal doesn't actually mean a great deal. It can be unwound at a moment's notice and on a whim very, very quickly. Because remember, this is not an agreement, it's just a deal. And it doesn't even have details usually attached to it. We're waiting for it, but I don't think much is going to come. So if current account deficit of the United States are not going to come down, which I don't think they will, then we're going to revisit very much similar topics, probably in 6 months, 12 months' time. Also, you correctly highlighted, we have not yet done with industry-based tariffs, because we have not yet spoken what's going to happen with copper, what's going to happen with lumber, what's going to happen with pharmaceutical products or chips. So from my perspective, any deal is better than no deal. The fact that insanity premium come down, that's good news. But it's still, remember, will probably raise effective tariffs in the United States to around 15–20%. They were only less than 3% in January.
All right, here. So, like the way you described it, the insanity premium. So, I guess you're saying that the deal makes things just less bad. A U.S. deal with the EU, are you expecting that to come to fruition soon? And is it going to be similar to Japan's at 15%?
Well, the degree of hostility that U.S. administration exhibited to Europe actually was generally higher than either to the United Kingdom, Australia, or Japan. So I think it's a little bit harder to negotiate. But clearly, Europe does have several bazookas that they could use. So I never believed that they're going to go to 30% because Europe would have rolled out quite punitive actions. So my personal view is that we probably are going to end up somewhere close to Japan, but perhaps not as favorable. But again, we're not going to go to 30%. We're not going to go to 50. None of those things will happen because at 30% tariffs, transatlantic trade basically will cease.
I think, Victor, the market is going to be perhaps forgiving if not all the trade deals are done by August 1st and if we get another deadline getting pushed and so on. But going back to the idea of that, we're not really seeing much of details, and all these deals that we are seeing may not be actually good deals. At some point, markets will come to the realization, okay, we want to sell because we need more details. So do you think that would actually happen around August 1st? Because these deals don't actually do much in terms of changing the metrics and outlook.
Yeah, it could. I mean, as we roll over beyond August, which clearly we will, there is no way you can strike so many agreements so quickly. And remember, these are deals, these are not agreements. It takes you usually up to 3 to 4 years to negotiate just one single agreement. So people who are looking for details are not going to find them. You find those sorts of deals will not separate what is the raw materials, what is intermediate goods, what are the final products, how does it impact importers, how does it impact exporters, consumers. I don't think you'll find any of that. Now, that basically also implies that they can be changed incredibly fast. So, as I said, in the case of Vietnam, widening deficits with the United States, a lot of transshipment through Vietnam, and suddenly the tariffs were 40%. They were not 20. So are you going to see a lot of that coming through? The answer is yes. In the shorter term, if they sign up with Japan, UK, Europe, I think that's probably good enough for a period of time. For the market to be forgiving. Because remember, we're talking about equity markets. We're not talking about fixed income market. We're not talking about currency, just equities. Equity fund managers are by definition bullish. Without growth, without bullishness, equity as an asset class does not exist. And so what you find is that so long as U.S. economy remains resilient, so long as U.S. corporate sector remains resilient, I think Donald Trump will have a benefit of the doubt beyond August 1.